Welcome to the Trader Merlin Show with your host, Merlin Rothfeld.
Oh, hello everybody. Did we even get an intro? Did I see an intro there? We got an intro. I guess I'm late. Hello everybody. Welcome to Trader Merlin. I'm Trader Merlin with the same shirt on in that wonderful graphic that you see there on the screen. What we're going to try to do, as we've mentioned, we're going to try to make these shows more specific to a topic. And then, of course, during the show, we might have other offshoots that go into different areas, which I will do today. Today's topic to me, what to do with your 401k when markets crash. Why? Because I had Jeremy, I had Cameron, I had several, Serge as well, all within the last 24 hours send me comments saying, hey, what do we really should be doing with our 401ks here? So I'm going to kind of make the main bulk of the show today about that. Of course, I'll do our normal thing here and go over other topics. On some housekeeping news, I've been telling you, I've been trying to build this website. And of course, since I'm not capital rich right now and I'm doing this all out of my own pocket to get this show going, I built my own website last night. Yes, my skills are amazing, I'll tell you. If you go to TraderMerlin.com, you can find out more links there. It also gives you links to the Twitter feed, the Instagram, the Facebook, all that other stuff. Of course, the bulk of the content will be here on our YouTube channel. So, of course, hit subscribe, give us thumbs up and like buttons if you want. But if you have questions during the show, if you have questions that maybe aren't during a live show either, you can go to TraderMerlin.com and you'll see there's a submit form like you had the Power Blast at Power Trading Radio. Just send your questions in there and hopefully I'll get to all those on the next show. And of course, welcome to everybody. It's on our social media channel out there on YouTube today. Hopefully you guys will send in some questions. Hello, Tiger, Barry, and Gayer, and Henri. Welcome to the program. All right. Another day of just going, I cannot believe what I'm seeing out there. There was some crazy, it was so crazy, I'm actually going to go the opposite direction today. Normally I like to start at the bottom and work my way up to the best performers and just the good stuff. So we end on a high note. I'm going to start on a high note and work all the way back down to a you have got to be kidding me note when we finish our seventh number here. So TJ is going to start me off. The best performer on the day, obviously in a situation like this where we have a bunch of fear, is going to be the risk-off approach. That means GLD was your best performer, or gold. Here's your gold futures, as you can see, spiking up, getting ever so close to that $1,700 mark that we mentioned. We've been talking about that for quite some time. That was a target that most of our viewers had out there for gold. A lot of people thinking actually higher, and I think that 1,700 will probably be eclipsed next week, and we'll see it go even higher. The high for today was 1692.80. Right now we're at 1674, so not a bad day for gold, up 0.39%. And while you're probably thinking, oh, that's not really that great, and who cares? Gold barely moved to the upside. It's really when you look at the other numbers from the other markets that you go, okay, I would be happy with a 0.39% gain. Number two on the list, which has probably changed already, here is your Bitcoin price. Well, yep, it's 0.03. We're calling it pretty much unchanged in the last 24 hours for Bitcoin. Some of the other altcoins did better. I may actually start a little segment of the show where we spend probably 3 or 4 minutes just looking over the crypto markets, but that's really kind of depending on what you viewers would like to see out there, because again, I'm making this show for you, the viewers. Some of you could care less about cryptos. Others of you are fanatics. Maybe I just make a separate crypto show. Who knows? All right, so that was number one. And number two, rounding out the podium, we have the S&P 500. TJ will bring us back to the Clik platform. Here you see the ES. Not the best looking day, although it did surge. That last hour or so of the market, a half hour of the market, really had some great moves to the upside. You can see this red candle here, but it was a much bigger red candle. Still not getting back to the lows that we saw on the 28th of February. I'll show you a 5-minute time frame here so the viewers can see what it looked like. Look at that last, right around 12 o'clock. The last hour or so, just a great rally, which pretty much erased most of the losses intraday. It's the after-hours session where we really felt the punishment for most of these major market indexes. All right, so that was your podium. We'll go back to fourth place here, which is the NASDAQ Composite. It also had a pretty ugly day, down 1.87%. The S&P was down 1.71, so NASDAQ just slightly worse. I won't break it apart to the intraday candle here, but you guys can see obviously a pretty ugly day that did recoup some of its losses, but all in all, there is a ton of fear out there going on. Russell 2000, thank goodness I closed out my call options on those. I'm sure they lost some premium, and today, what's noteworthy about this is the way that it moved. So you guys can see here, we have this little, I don't know what color that is, I'm colorblind, but it's magenta or purple line here. Take a peek at where that lines up with, right? That's the lows for quite some time, and it actually goes back to a demand zone all the way back to early 2019, but also a bounce point here in August of 2018. Today we knifed below it. Now we didn't close below that line at 1444 on the Russell 2000, but we did pierce it today, which means if there was some demand there, it ripped through it. So hopefully, for anybody who's bullish, this is a holding point. I don't think so. I think you're going to see more downside movement here in the Russell 2000. It does not look too good, especially given what it looks like against the other indexes. All right, now I've got a couple more to go here. We're going to go to the ugly stuff now. Crude oil. We're going to look at crude oil was down, and this is an ugly one. This is where it gets really crazy, because I'll tell you about a position that I opened up today, and I'm beat up on it right now. I actually opened up a long position. I bought some calls actually on XOP, which is a crazy gamble move on my part. Look at this chart on crude oil. That red candle is one that just goes, man, this is a day trader's dream, and it was pretty much down Periscope all day. Ugly. I'm going to have TJ show you guys the longer term picture. You know, if you look at this thing, we were in the beginning of the year in January, right around that $65 mark. Right now, you are looking at the lows right now at $41.39 on crude oil. Now, we'll go to a weekly, so maybe we can get a little bit of perspective as to where this may come back into. The interesting thing apart about this is, if you look at it, we have already pierced some lows that I thought we might hesitate at, which would be right around 42.50 to 43. Well, now the next stop, is very close. It's right around that $40 mark. If it pierces that 40, you could see this thing go all the way down to 28. Now, a large part of this is being driven by the talk right now with OPEC and Russia and Saudi Arabia. OPEC wants to do cuts so we can get the price of oil back up, because obviously a higher price for oil means they make more money. And Russia's going, no, comrade, we do not want to make this deal. And that's causing this to be a weaker than expected move in crude oil. I went long XOP based off the long term. I'll bring up XOP here, which I normally wouldn't do in our top 7, but why not since I'm on the topic. Here's XOP. It's basically an ETF for oil and gas explorers. It's not that it's coming into an area of demand. It's just this is a basket of securities of major companies out there that I'm bullish on for the long term. And buying it down around $12 to me felt pretty good. I actually bought the 15 calls for June, $15 calls for June, and they're underwater right now. So we took a little bit of bat over a grand of paper losses on that one today. So we'll hopefully be reporting positive gains on that one here in the near future. All right, now the bad one. This is the one for 2 straight days I've been just shaking my head going, you got to be kidding me, guys. This is crazy. I can't believe this, that the 10-year is falling like it is. Now, if you look at the 10-year note today, here is the futures for the 10-year Treasury note. Not only was yesterday just a gigantic, one of those shake your head monstrous candles, look at today's follow through. Another one, huge move today up in that 10-year. I tell you, I've told you before, I don't trade the 10-year futures contract, but if you do, there is some serious action out there in this marketplace in that specific contract. I don't know all the details of that contract, which is why I don't trade it. You guys know I'm always an advocate of making sure you know what it is when you trade it. So huge move out. Look at the we closed it out. Let me see if I can get this up for you here real quick. I want to show you guys the results of what happened with the 10 years. TJ will actually get this for me in just a second. So I'll talk through it as he does. We mentioned the other day it was flirting with 1, right, on that 10-year. Today, it closed at 0.70. That is an unbelievable drop. That's a 23% drop in the value of the 10-year note today in the yield. That's incredible. What that means is this put even more pressure on the Fed. Now, I mentioned something yesterday where I said the forecast was to have a 50 basis point cut in 2 weeks when we have the Fed meeting on the 18th of March. That just changed again today. There was a 84% chance yesterday that they were going to do a 50 basis point cut in 2 weeks. It's now a 58% chance of a 75 basis point cut. So here we spent months from 2015 to 2020 raising rates incrementally because the economy could absorb it. And now all of a sudden, if you watch Airplane, the doo-doo has hit the fan and expectations are we're going to be at 0. We should be at 0 probably by the April meeting given what they're forecasting. And the reason for that is, look at that 10-year yield. Oops, that's not the 10-year yield. There's the 10-year yield. If they don't cut the short-term rates for the, let's say, 3 months or the Fed funds rate, that means that you're going to see that shorter end of the yield curve maybe go inverted. So they're doing this as an emergency thing to jack down that animated yield curve so that it doesn't go inverted, because this is falling so fast, the 10-year. Very scary. I just don't really know what to make of it. To me, it's kind of a panic type mode opportunity. For those of you who are looking to buy a home, again, I'm actually looking at refinancing. If you could drop 50 basis points on your existing loan, that'll probably save you a ton of money in the long term, so you might want to check that one out. All right, I think I went exceptionally long on this opening segment. We got about 12 minutes in of just content talking about, oh, cool, there we go. 12 minutes into this one, we will now go into what the original scheduled topic was going to be, which was let's talk about 401ks and some of the issues with 401ks. So, yeah, I got to find this one out here now. TJ had it all set up for me, but because I restarted things, I moved stuff around. This is what happens when I do things live. All right, so the 401k side of things, why is this so important? It's important because right now people are getting hammered and their 401ks may be down about 17%, 16, 17, depending on what you're invested in. It's mutual funds, so the killer there is you're still paying fees on top of all of that, right? You're going to pay your fund administration fees, you can pay all these plan fees. It's fees on top of fees. So it begs the question, what do you do with your 401k plan? Now, there were questions that came in from Jeremy. There were questions that came in from several others of you. So I will try to address all of those in two separate fronts. Number one, let's just basically do it like we do content within all my Trading Academy classes, which is let's have a structured approach. It should be pretty much a flow chart of what you are thinking. So you set a series of steps and says, if this happens, I will do this or I will do that. It's binary, right? Don't give yourself too many choices here. You drive yourself nuts. So first step is, what do you do with your 401k? So TJ will start us off with some graphics. Thank you for preparing these, by the way. I always love when TJ throws graphics out there. The first step is to know what you're in. Now, this is one piece that has blown me away. I've sat in on the Strategic Investor and Proactive Investor courses of Online Trading Academy, and it's one of the first things we ask is, what are you invested in? Your 401k, what is it in? And most people just go, I have no idea what it's in. I just, put money in every month and it's allocated to something because they told me to pick 2 or 3 different things, so I picked. And most of the time, you don't even know what it's in. Let me ask you viewers out at home, since I can make this interactive, how many of you know what you're in your 401k? Do you know what funds you're in, which market segments you're allocated to? Is it large cap, small cap, international bonds, what type of bonds? Do you know the details? TJ, the chart master, do you know what you're invested in, my friend?
I do know what I'm in, but I don't know the exact name, but it's the equivalent of the cash account because I was looking for a drop to come sooner or later.
Right, so you got to that point where he's like, I'm freaking out, the market's not looking so good, I'm just going to go to cash, right?
Yeah, exactly.
Okay. At some point, we'll end up buying back in, but at least TJ knows what he's in. And I'll address that one here, interestingly enough, because cash is probably going to be the topic of discussion here today. Number one is know what you're in. So what I would encourage every single person to do that has a 401k is just go out there, go to your 401k fund provider or log into your account, and then just pull up your statements. And it's going to be a bunch of gobbledygook ticker symbols, but let's say it gives you a specific symbol that you're in, the NBGNX. I just made that up. Normally it's a 5-digit, 5-letter code, and that's the ticker symbol for a mutual fund. Usually it ends in an X as well. Then you can go to something like Morningstar, and you can actually type that symbol to Morningstar, and it will bring up, why don't I just do something like that? So TJ, if you wouldn't mind, go to Morningstar, and again, we have no affiliation with Morningstar. I'm just using this as a reference for you guys. So here's Morningstar's page. Let's just type in a mutual fund. This is one I had maybe 15 years ago, so I don't even know if it still exists. NBGNX. There you go. It's still around. The Neuberger Berman Genesis Investor Fund. All right, so we don't want to join that. There's basic information you can get for free. So I'll make this bigger so you guys at home can see it. Right away, you can tell that this is a mid-cap growth fund. It says small growth fund, so now I know that this is really kind of more towards the small cap fund. So if I'm looking at the Dow Jones Industrial Average thinking it's going to impact this, probably not. This is probably going to be more impacted by what? The Russell 2000, since it's small cap growth. You can also go in here and see fund analysis. It'll tell you kind of, let me see here. There was one that would actually give you a breakdown of what assets it's invested in and where. So for example, you can see that 96% of this fund is U.S. equities. So you're pretty much buying U.S. stocks. So if you owned this and you thought, well, U.S. markets are going to take a dive and I'll be safe with this one. No, you have full exposure at 96%. What I really encourage you to do is to scroll down a little bit, and it should tell you here where it's allocated. This is 23% in technology, right? So you might find that you're heavily overweighted in technology. Bottom line is, start a spreadsheet and find out exactly what you are allocated, how heavily you are allocated, and into what positions. That's the way we can start to gain an understanding of how exposed are you to a market correction, not only an overall market correction, but to specific market segments or assets. So that's step number one, is know what you are in. Most don't. If you don't feel bad. Just go out and figure it out so you know exactly what you're in. Number two, is once you break that down, you're going to be in mutual funds. Most 401k, unless you're part of the elite, are going to be mutual fund based, unless it's self-directed, and most employers don't have self-directed. In there, you're probably going to find one of two things. You're going to find that you have stock ETFs or bond ETFs. Now, some of these new 401k providers do offer alternatives, which makes it a little more complicated. When I say alternatives, we're talking about things like real estate. So there might be some commodity mutual funds. Those types are, we'll call those non-traditional. I know it sounds awkward, but normally in a 401k, you just get stocks or bonds. It's binary. So that's step number one. Know what you're in. Number two is, what's your viewpoint on the markets? If you're bullish and you think these markets are going to continue to rise and this whole coronavirus thing is just a great buying opportunity, great. If you're bearish and you think these markets are headed to hell in a handbasket, then great. It doesn't matter to me what your viewpoint is. It's about you setting up a plan for your viewpoint, which brings me to number three. Build your plan. Now, I don't want to just give high-level theoretical stuff. Let's come up with some basic examples of what this might look like, okay? Let's say, for example, Vernon, a bunch of you saying you have no idea what you're in. That's great. That's awesome. It's okay. No, as G.I. Joe told me when I was a kid, knowing is half the battle. So let's say, for example, you think that the markets are going to continue to rise, right? We are in an unbelievably strong bull market that's been intact since 2009. And let's say you felt that's going to continue. I think we're actually headed for more correction, but it's okay. Opinions are opinions. Let's say the first scenario is that you don't want to lose anything, right? I've had all these gains. I want to protect myself. I don't want to lose anything. Well, you can't lose. There's no way you can not lose anything. You're going to have to lose something on transaction costs. Number one is probably the simplest thing, which TJ did, which is go to cash. Now, most mutual fund or 401k families will not allow you to go to cash. It's a cash equivalent. And that cash equivalent may be something like a money market fund within your 401k provider family. For ours, there are different, there isn't a mutual fund in the 401k family that I was invested with. It was a bond fund. And basically, I think they call it the risk-free fund or something like that. So usually that's going to be in the shortest term bond funds, like a 3-month Treasury yield or Treasuries or something like that. So you have to do a little bit of digging, look through your prospectus and find it. But generally, these are the three ways that you could go to cash or cash equivalents. And that doesn't mean you're not going to lose anything, but you're probably going to sidestep a lot of the market crashes. Number two, what if you felt that you just want to protect your portfolio? I don't want to close any of these mutual funds out or anything like that. I just want to protect my portfolio. This is where it gets extremely tricky with the 401k because it all depends on what you can invest in. For most of them, you can't use options. If you can use options, buy puts. You would buy puts on markets that are reflected by your specific mutual funds. For example, you guys saw earlier I had the Neuberger Berman Genesis fund up there, and we looked at the profile of it, and it said that it was predominantly small caps, right? Well, if it's predominantly small caps, what would I want to buy puts on? Because I can't buy puts on those mutual funds, the NBGNX. But since NBGNX is a small cap mutual fund, I can go buy puts on IWM, which is a small cap mutual fund. Therefore, I'm essentially hedging that position. Now, there is math involved because depending on how much of the mutual funds you have in share-wise, there is an allocation or a number of puts that you would want to buy to offset that risk. Now, if this happens, what's the damage to you? Obviously, you're not so worried about tax consequences in a 401k, so just selling it would probably be the easiest thing to do. But if for some reason you didn't want to sell, by owning these puts now, if the markets really started to disintegrate, your options, depending on how fast it fell, would probably start to gain more value than your equity position would lose if it's balanced proportionally because you have the leverage of options. So you might actually be making money if the markets crash with a hedging process like that. Other one would be selling futures. If you can trade futures, if you're self-directed, you could do that as well. Or inverse ETFs. Those are the three options. Now, if you have a normal 401k, and this is why I think Americans really have the bum deal here, you can't do anything. All you can really do is go to cash. There aren't inverse ETFs, inverse mutual funds in your portfolio. There aren't going to be futures or options available to you unless you're self-directed. So it's one thing you might want to ask your employer, just say, am I self-direct? Can I self-direct my 401k? Probably they're going to say no. If that's the case and you still think these markets are going to rise, then stay the course, I would say. That's a decision that you have to make. All right, third scenario would be, hey, these markets are not only rising, but I want to add to my portfolio. I think that this big market sell-off right now could be a great buying opportunity. how do I take advantage of that? Well, number one, we go out and we find demand zones and you add to your positions there accordingly if you have some cash available in your 401k. That'd be the easiest way to do it. And this isn't just a demand zone, but a zone where you feel comfortable saying, hey, I would like to buy this at a specific zone. I would be a long-term holder here. Bears going up, bulls going. Did I have it backwards? I didn't have it backwards. I had it right. I think you guys are off it. I had the symbols correct there. TJ, go back. Now you guys got me thinking. I didn't have the symbols wrong. Go back. No, green's going up. Oh yeah. Wow, you're right. Who did that? TJ must have done that. Yeah. Thank you guys, you caught me. I've been in such a rush to do this on top of all the other work I'm doing. I messed up. Yep, you caught me. Thank you guys so much, Mark. Oh, Mark and Ruben and Harrison, thank you guys. Yes, this is backwards. I don't know how I did that. Now I'm going to be flushed with color and embarrassment because I normally don't mess up that bad. My apologies. Thank you guys. That's pretty damn funny. Oh, boy. Well, let's go back to the market's going to rise. So what do? You add to it at demand zones, right? That would be your first step, is to add at demand zones. The other one would be to sell puts. Yesterday we had a great example of that with Alejandro where he's saying, you know what, I want to add to or buy JetBlue. I don't want to buy it at $13.90, but I will sell puts at $10, collect 50 cents worth of premium, and then if it gets down to 10, I'll be happy to buy it there. But if not, I'm collecting premium. So to me, that would be one of the great ways in this market to capitalize because the volatility has been so high. Premium's been pretty darn good lately on those options. But again, most of you probably can't do that in a self-directed 401k. All right. So now to the opposite illustration, which, yeah, is totally wrong. This should be a bear going down, not a bull going down. Thank you, guys. I know, Mark. Thank you. So let's say you're a bear and you don't want to lose anything, right? You think that this market's going to hell in a handbasket. The safest thing you can do and easiest thing you can do is just go to cash, or as we said, a cash equivalent, like looking at a money market fund or those short-term bond funds. That's the simplest thing. I myself am 100% in cash in that 401k at this point. You guys heard from TJ earlier. That's where he's at as well. And when I make changes, when I reallocate, I'll let you guys know that. But I have a feeling I'm going to be short for a while, or out for a while in that 401k. All right, now, second option here, if you think that the markets are going to fall, is just to protect your portfolio, right? So I've got long positions. I just want to make sure I don't lose when this market drops. Now, let's be honest. If you really feel these markets are going to drop, don't be so damn stubborn. Close your positions and go short. Anyway, you could buy puts, as we mentioned earlier, which would be the simplest, most leveraged way to do it. You could use inverse ETFs, or as we mentioned earlier, you could sell puts and try to buy back at a point much lower that you felt comfortable with. Now, what about our third option? Oh, boy, this is all over messed up. How do you want to make money on the drop? Okay, you can either, number one is you have to close out your longs. So first step, if you are in a 401k that's self-directed, close out all your mutual funds, go to cash, and now you could potentially be buying puts if they let you do that in that account. You could also be looking at inverse ETFs or sell puts. So these are basically the simple steps. Now, I'm not walking through all the mechanics of each one of these. But I just wanted to kind of do a quick overview because many of you seem really confused on what to do. So now you've got your step 3 and 4 here is going to be build your plan and then review your results. Building your plan is what we really just looked at, which is here's all the different things that I need to do to make that come alive, right? I want to make sure that if I believe these markets are going to go down, here's what I do. Step 1, step 2, step 3, step 4. And to me, that's probably the most important part in all of this is making sure that you have a plan in place that you don't violate, and it also keeps you accountable to follow your rules. So that's it. That's your 4-step process that I wanted to put in place today on what to do with your 401k, especially during market crashes. I, for one, am in the camp right now, especially with what I saw today with the 10-year yield, which is just, I still am just shaking my head in dismay of the mindset that we're going to see much lower markets. I'm actually hearing rumblings out there about potential shutdowns of major sporting events, of major malls. We're hearing right now about massive cancellations of huge events in like Las Vegas, or Facebook canceling their annual giant event that they do. Can you imagine if the CES, Consumer Electronics Show in Las Vegas, got canceled? What would happen to just the amount of money for the hotels in Vegas, the spending? The amount of consumption is just astronomical during those types of events. So this is really going to hit hard. I just think that our second quarter earnings are going to be one of those ones that people just really start to freak out. But it's a good thing because after that, we might see tremendous buying opportunities because I do feel that the coronavirus will end up being one of those ones we go, yeah, there were a lot of people that died from it, but it wasn't, there wasn't tens of millions of people. It was a few thousand, and as unfortunate that is, it's good that it wasn't much worse than expected. Right now, people are going through just absolute panic and phobia. Pavneet says, any website to understand 401ks in detail? I'm sure there's a bunch of them out there. OTacademy.com had a lot of really good information on 401ks, but I don't know particularly offhand of any one site that might be the best for that. Do I need different series for different states? I don't know what you're talking about there. What do you mean by that? Do I need different series in different states? Not quite sure what you mean by that one there. Let's see, what else I got? I'm just reading the questions that are coming through on TraderMerlin Facebook page here. All right, you guys are a lot of statements here. Unfortunately, supply and demand zones don't take short-term fear in the market into account. Yeah, that's one thing you have to understand is if you're looking at supplier demand zones on 15 or minute charts or even hourlies right now, the way these things are moving, they're going to get blown out. It's really about going out to the weeklies and monthlies at this point to find out where that stability might be on some of those longer term time frames. So it's a little bit challenging in this environment right now to capitalize on all that type of stuff. I understand. Let's see. Do I have any Facebook questions coming in here? I think I did. What are those crazy going to do? Yeah, Brian, that's a funny one. I'm seeing all these reports about people just actually hoarding toilet paper and water in Costco. I mean, think about this. We didn't mention this on the how to capitalize on the coronavirus thing on Wednesday that we did. But if you really think about it, Costco is probably going to have blowout earnings, right? They're probably going to do pretty good. They're selling stuff like crazy right now. What are all these crazy? Brian says, what are all these crazies going to do with all that toilet paper? It's not even close to Halloween. Yeah, but be ready. Come Halloween, we could see a lot of your kids just TPing all kinds of stuff out there. Let's see. I'm looking at all kinds of other different things to go through here. Lots of questions for today's show. All right, well, I won't be able to get all of this info through today's show. Unfortunately, I'm trying to read too many questions over here at once. I would love to answer your question. Oh, thanks, TJ's on it for me today. All right. No questions on our Facebook page. You guys should have asked questions. Today was the day to do it. Anyone else? So puts on XLY. Well, that's a potential. Let's go out and look at that chart for you. Why don't we just, since we're there, let's go to XLY. TJ, if you don't mind, go to XLY, and we'll bring up the consumer discretionary. Of all of the ones to be careful with, this is one that I would actually go the opposite direction on, right? Think about if the markets really crash, what are we not going to cut back spending on? Consumer staples certainly would be a good one. Healthcare, discretionary is, yeah, it'd be okay. I think right now what you want to look at is retail stocks, technology stocks. I think could take a big hit. Although you have some of these that will just be purely online. Energy, obviously, right now with what's going on, the oil is just getting absolutely crushed. So yeah, buying puts on some of those might be an option. I'm not really talking as an investment advisor. These are just my opinions on what I think about the marketplace right now going forward. So there you go. There's a couple little tidbits out there for you for today's show. I didn't see any more questions come through, but let me just real quickly answer a couple here. Jeremy out in Raleigh, thank you for the comments and questions and the positive feedback. I really do appreciate that. I won't read it all, but basically says there are so many options out there as far as who to hold an account with. I'd love some of your insight into with who you think some of the best brokerage houses are that offer the most flexibility with their self-directed IRAs along with lower fees as a factor. You know what? I think if you just go with the major ones, like I have IRAs at E-Trade and Ameritrade. And I had them at E-Trade, but I actually had an issue with E-Trade support. There was a stock that split, and they kept trying to charge me all these crazy fees, so I moved over to Ameritrade. They're both great. I would make sure you just check to see that in that IRA, you can trade what it is that you want to trade, right? Don't just open it because it offers one thing. Make sure it's what you want. So, for example, for me, what would be important in that would be that I could trade options and I could trade futures in my IRAs. Those are important for me. So check and make sure that they offer those. Then you can just do a simple side-by-side comparison of the fee structure. They're all going to be extremely competitive pricing right now. So to me, they're pretty much the same thing. Let's see. Last part here as I wrap up. I'm going to try to keep this at a 30-minute show today until you guys give me some more. Let's see. Question came in from Cameron. He says, regarding potential market downturn and how we should best prepare for it. It's a little late for the preparation side of it, Cameron, but we're still rolling. He says, in my case, I'm an options trader with very low amount of capital since I'm currently stuck in college. You're not stuck. You're experiencing, enjoying college. Have fun in there, my friend. Sometimes I would gladly like to trade you. I'd love to go back to school. I'd be like Rodney Dangerfield doing the triple Lindy. And I've been doing a lot of research on my own, but I still find myself stuck in the question of what are the best puts to buy on what indices or stocks? How many days to expiration? Finds it extremely difficult. Look, it really depends on you and some of the Greeks. I'm not going to go into on this show all the different Greeks out there. There's certainly some free classes at otacademy.com. To me, it's about time horizon and strike price and objective. So, for example, these options that I bought on XOP today, I actually bought call options because I think what's happened with oil today is a bit oversold. I think you actually see Russia back down a little bit because they want to make some money on oil too, and we'll probably see a pop on Monday. That's just a gut feeling. That's not really a supply and demand thing. That's just a gut feeling, and it's been very, very oversold, so that's not the best way to be making investment decisions. But I chose that because I wanted to give the market a little bit of time. I think right now we are in a knee-jerk, fear-driven type of environment. So normally, if I'm buying, I won't do anything less than 90 days. 90 days for me is the buy point. If you really felt that you want to buy something for a year, that's fine, go for it. The longer time you give yourself, obviously the more time you have for that option to come to fruition. So some of the ones you mentioned here, you're looking at XLF for 2020 or 2022. That's a long way out there. Certainly you could do that. I mean, you're going to pay for the time value there, right? You're going to pay a lot of premium for the time value. The intrinsic value is probably not going to be very much. But all of these, everyone that you mentioned, it really just depends on what you're trying to achieve, right? If I'm more of a, I would say a swing trader of these guys. I don't usually go out and buy leaps and go more than, let's say 6 months on an options contract. That's just me personally. But you have to experiment with them because sometimes you'll find certain strike prices have a little bit higher premium intrinsically than others. So that just understanding the Greeks, which I'm not going to get to on this show. So, all right. So Cameron, go to that one. Let's see. You're not being, no. Oh, okay. Okay. I see you guys over there. All right. Trying to read the comments and do all this stuff at the same time. All right. That's actually going to do it for today. We're actually our 30-minute show. What I wanted to do is I wanted to actually give you guys a list of all the things that are going to be happening tomorrow, but I just didn't get a chance, or on Monday, but I didn't get a chance to build it all out. I've been just really rushing to try to get a bunch of pieces set up for this show. If you have anybody who's got a 401k and you think might benefit from this, I would encourage you to copy the link out there on YouTube or point them to this video. While you're doing that, tell them to subscribe to this channel. My goal is, if I can get to 1,000, let's see, I need to give some incentive out here. TJ, what should be the incentive? If I get to 1,000 subscribers, because when you're at Power Trading Radio at over 6,000, but what should be like the reward for, or do I have to do something crazy if I get 1,000 subscribers?
Pizza party.
But that doesn't help our viewers. I'll bring my dog on the show. Actually, TJ will bring his dog on the show. How about that?
There you go.
Can you bring Milton on?
See Milton.
You guys get to see Milton would just sit here on the
pug.
desk and grunt. He's a pug that has breathing problems.
He's got too many health problems. He can't come in.
All right. Well, my dog's healthy. We'll bring my dog in. So, yeah, I need to get this to 1,000 subscribers. We're at 218 in 5 days, which isn't bad, but a lot of this is going to come down to you guys helping me, spreading the word, sharing this video, or especially if you have somebody who's in a 401k that just doesn't know what the heck to do and is panicking. I think that what I covered here today was obviously very high-level stuff. Many are probably want to go more in the weeds, which we can do in future shows. I'll tell you what some of the ideas I have for next week are. Obviously, one of the shows I want to do is basically looking at nothing but oil for an entire show because of what's going on there, and then interest rates. So I think next week you're probably going to see two very, very, very exciting shows next week based off those two. If there's something that you guys would like us to present, cover on the show, I would encourage you to go to TraderMerlin.com. You can send in a question there or a suggestion or anything that really you think might help us, encourage us, or even discourage us. I'm okay with hate mail as long as you tell me what it is you didn't like and let me give me the chance to improve it. So send it on in at TraderMerlin.com. You can find some resources there. I will be building that out a little bit more as we progress to put up more current shows and make it more updated. But give us your feedback. Hopefully you guys liked today's show. If you did, give us a little thumbs up out there. Share the show. Have a fantastic weekend. On behalf of all of us here at Trader Merlin, have a fantastic weekend. See you Monday.
The Trader Merlin Show is produced by Merlin Rothfeld, Gary Christmas, and TJ Writings. The show is engineered and edited by TJ Writings. Please contact TraderMerlin at gmail.com for comments and questions.